So I just don't know what's happening today. So let's talk to somebody who gets paid to do this. Shana Sissel, CEO of Banríon Capital. Shana, what did you make of what was happening with our Federal Reserve, with some of the economic data we've received over the last couple of weeks? How is that kind of influencing your view of 2025?
So to be clear, the Fed has come to my view. I had always been under the assumption that it never made sense to do 4 cuts in 2025. In fact, I don't think it made sense to do a cut now. The economic data was not suggesting that that was necessary. Inflation has been sticky. The job market has been resilient, although it has softened, but that's kind of what we wanted to see. We have, strong consumer consumption. We have strong earnings. There was no real reason I could see that supported cutting rates because there was no real friction in the economy that suggested we needed that. So when Chairman Powell came out and sort of said those same things and also noted that there were 4 folks that dissented and that did not think that there should be cuts. I thought that was in line with, what made sense given the data. Now, that said, the market reacted negatively because the market was optimistic that there would be 4 cuts in 2025. And he made it pretty clear that that's not as likely. And that as long as the data remains as strong as it is, they're going to have to be cautious about continuing and cutting.
So, Shana, if we wrap that in then to the market reaction, because a large portion of why they reduced their cuts was because growth is really good. Jay Powell said in the conference, he's like, U.S. is growing. The economy is looking really good. So if we just look at this decline in the equity market, the sophisticated question is, do you buy the dip?
Well, I'm always a fan of buying the dip. I think that's always a smart idea. There's no reason to believe that this isn't a good time to buy the dip. The time that you want to pause on buying the dip is if it's not like the scenario we have right now. If it's more of we're selling off because there is negative economic conditions and people are kind of trying to get out of risk assets. So I am a fan of buying the dip. I think what I would suggest now is to be more deliberate on where you buy. There are areas of the market that are still expensive, but given that the economic data is broadly positive, I think that there's opportunities in the market outside of what we always talk about, which is the big tech names and AI, to find opportunities today. Although that said, I've seen some attractive stuff from parts of the tech sector that maybe we haven't talked about enough lately. But again, that gets to my point of being a little more cautious and deliberate about where you pick your spots.
Shana, when you talk to your clients, does valuation come up as a concern? Because, boy, it feels like it should be a concern.
Well, first off, let me apologize for continuing to sniffle. I always seem to get a sinus infection right around Christmas every year. And I'm like struggling with it right now.
Oh, I'm like convinced I'm getting sick. It's driving my husband crazy. But go ahead. It's fine. We can hear you.
Every year this happens to me, always around Christmas. But in terms of valuation, yes, actually, that is the one area of concern. The concern is not around economic conditions. It's not even really about inflation or employment. It is about valuation and the areas that have done so well. Risk assets have performed well. We've seen, obviously, crypto do quite well. That was a space that back over the summer and early fall, I was pretty bullish on. And we saw it go straight up. You have all your big tech names have done pretty well. So they're pretty expensive. But that gets to my point about being deliberate about where you're looking for opportunity, because it exists out there and the economy is such that it gives us the privilege, if you will, to go out and find attractive names at attractive valuations that are going to benefit from the next part of this economic cycle.
Like what? What's on your radar right now?
So I really like 2 names. One of them was probably on my notes, and the other one is sort of newer, and I haven't updated my notes in like 2 weeks. So it'll probably be a bit of a surprise to you. The first is Leidos, which is a government contractor. This is a stock that I've followed for years. It is kind of unique in the sense that one of its most profitable and growing businesses is its health division, which I find really interesting. Also, as everybody's traveling over the holidays, including myself, if you pay attention when you go through TSA, all the machinery that you're going through is Leidos. And a lot of people don't realize they kind of have a stranglehold on that type of security. So I love Leidos. It's actually trading at a very reasonable valuation, despite the fact that the stock's also done really, really well. And that's an example of a pick your spots kind of by the dip. The second stock that I like right now, which is kind of a second derivative play on the AI phenomenon, is Marvell Technology. Again, a stock I've followed for a really long time. It is a chip stock. It has not participated like the NVIDIAs of the world because it's kind of a second derivative chip play. We're starting to see, and the CEO of Marvell has come out and talked about how, as we kind of transition to the next part of the AI revolution, Marvell is kind of set to benefit from that. So those are two names that I really like right now.
All right, appreciate that, Shana. Thank you so much, Shana Sissel. She's the CEO of Banríon Capital Management, joining us and giving us her thoughts on these markets. Again, futures pointing to a lower open this